A trader became funded with this EURUSD scalping slash day trading strategy. I actually tried it out myself for a week and I placed 20 trades, and out of those 20, 17 are profitable. So this EURUSD trading strategy definitely works, and let me show you how. So the very first thing the funded trader says, he uses supply and demand zones. I believe the best ones are using floor pivot points. You can find pivot points in a variety of different websites. I prefer babypips.com, and we're going to use the daily real-time interval. Simply copy the numbers into your chart. So we have our nice little support and we have our resistance, supply and demand. On EURUSD, these pivot points will only work if you apply them properly. Meaning if it's the daily interval, you have to mark it where the newest candlestick started. So when the new day began, let's say it's Monday night time, usually 10 p.m, but really depends where you live, is the cutoff time, and then the next day starts. And when that happens, this is where you mark the line. Now, what the pivot points do for the US dollar is calculate what action happened in the previous day and give you nice and real-time supply and demand area zones to aim for. Once you have done all of this, head over from the 4-hour to the 15-minute time frame, and let's start to analyze a little bit what we are currently seeing. So clearly we have a nice little trend towards the upside. What's next for the euro US dollar? That's right, the resistance. We can see clearly that the red line indicates where the day started for the pivot points, right? So we have our supply zone and we have our demand zone. And currently euro US dollar is squeezing in between these two area levels, the uptrend and the resistance line. And the most important thing for this strategy is this, the resistance. The resistance line that we have marked with the blue rectangle is also where the pivot supply line is. This is super important because pivot lines are heavily respected by the markets. Whether you like it or not, trust me, they work really, really well. And since euro US dollar is currently squeezing, what do we need? We need a break towards the downside, because we know there is a lot of sell orders on the pivot line. The supply line over here indicates there's going to be a lot of selling pressure to push the market down. And since the candlesticks have been squeezing, it's either going to break towards the upside or towards the downside, reaching the next area, which is the demand zone just over here. So now let's just see how the euro US dollar strategy develops, and it continues dropping down. It actually manages to break the downtrend. So this indicates what? A push exhaustion scenario, which is typical. There is a push towards the downside. There's a retracement back. What do we expect? Another push towards the downside, just because this supply area over here has a lot of sell orders already placed. So once the price reaches this area zone, the trades get triggered and push the market further down. But unfortunately, this is not yet enough confirmation for us to enter. A push exhaustion scenario is simply a nice confluence, but we need to combine it with other indicators to make the trade much, much better. So how can we do that? If we simply use the moving averages, they will help you out dramatically. So what do we have? Obviously, there was a squeeze pattern. Moving averages don't indicate much if the market is stagnating. However, the 200 moving average is the overall market direction, which is important. As we can see, had a nice push and had an exhaustion back towards the upside just off the 200 moving average. That's how important the green line on the screen is. But of course, the moving average is also a lagging indicator. So the price will move before, it's going to show what actually happens. So moving averages is also a confluence. What you really want to look at is this. When it's trying to break the two moving averages, that's fine, but you really want to look at, the candlestick price action. So what do I mean? It breaks, you see, the 20 and 50 moving average, that's totally fine. Look at this bearish engulfing candlestick over here. This is a great indication for a short position. So boom, short position, stop loss just above this previous area line. As we can see, the wick is over here. Our stop loss just a little bit higher, so we could say 9 pips is okay. We are not scared of the 200 moving average because it's a lagging indicator. The only thing that doesn't lag is supply and demand, as we can see over here. We are predicting pretty much that there's going to be a lot of sell orders over here, as we discussed. That is why we can take this trade, because likely it's not going to break this pivot supply line, and it likely will continue moving towards the downside. So what we can do is target profit the next area of demand zone, which gives you a 3.29 risk to reward ratio. However, I would also recommend to always take partial profits because you never know whether it's gonna actually reach this exact demand zone or not, especially if you're scalping or day trading. You want to be closing at the same day, not a couple of days later. Although if you are swing trading, it's totally fine. So now we have a lot of confluence. Bearish engulfing candlestick, the moving averages again broken. We still have the 200, but we're not scared about that because we have our supply resistance zone over here. We also know that the price managed to break the previous area of support. The support was around here. As we can see, it made a new low and it managed to break the 200. So if he has done it once, likely he will do it again because this is the 15-minute time frame is not as important. And if we really want to improve this EURUSD trading strategy, we need the stochastic RSI. And as we can see, the stochastic is telling us that the market has been overbought, and likely after it's overbought, it's near the area of supply, it's gonna drop, right? So let's see what happens. The next two candlesticks managed to break the 200 moving average. Once this actually happens, you can pretty much take a deep breath because likely it will continue dropping down and you made the right decision. And as we can see, it continues dropping and then after, you know, pushes and has another exhaustion back towards the upside. As we can see, stochastic RSI again overbought, likely could be indicating maybe another push exhaustion back towards the downside. As I previously mentioned, you should take partial closes. So what do I mean by that? If the stop loss is 9 pips for Euro US dollar, we want to be taking our first take profit around the same area level. So as we can see, if we use the rectangle tool, previous area of, you know, supply and demand, there's many of them. Around 10 pips, 9 pips should be your first take profit. And then if it continues crossing like it does just over here, we can continue holding the rest of the trade. You know, 20 pips again, you're doubling your money already. So what you do, you close another partial, and then if it continues moving down and then suddenly goes up, you can, you know, close the rest of your position, whatever. Or just set your last take profit to the demand zone, which would be over here, and maybe leave the remaining position as not a scalp or day trade. You don't have to close it off straight away. Maybe leave it as a little swing trade, because there is a chance, a possibility that the demand zone you originally wanted will actually be reached. But you always want to take your profits because that's the best way to not go broke in Forex. There's too many people wanting huge risk to rewards, holding the trades too long. Trust me, you want to scale in and scale out in trading every single time. When you have a bad position, you want to scale out. When you have a good position, you want to double down and scale in. This is how you make money trading any currency pair for that matter, but EURUSD especially. And now let's just see how the market develops. So it continues moving towards the upside, breaks, has a little pullback. Where is the pullback actually? To the previous area of sensitivity, just over here. It was broken, nice push, nice exhaustion back to the previous area, had a consolidation, pushed exhaustion, another push towards the downside, just because the pivot line over here has a lot of sellers. So it always triggers around this area level. It doesn't have to be a totally straight line. As long as it's near it, it's okay to enter. Probably was news over here, but it doesn't matter because the supply zone over here held and then it reached the demand zone. And after it did reach, as we can see, we are pushing back towards the upside, likely to retest, you know, one of the 3 moving averages. Just to further prove what I'm talking about works, this is a CAD Japanese yen using a similar trading strategy that I sent yesterday to my VIP members. You can join, by the way. Target profit is 160 pips, but we managed to bank 73 pips. We opened the trade with a bullish engulfing candlestick after it crossed the pivot line because I knew that the demand zone is going to be really strong on this level. And simply it went towards the upside. Of course, on this trade I slightly used a different strategy rather than the EURUSD one, but the concept stays the same. So trust me, try it out, see if it works, and comment down below how it works. I'm really interested to see what you think. So if you enjoyed this video, you might enjoy this one over here. VIP signals below. If you want them, grab them, 50% off. And also there's an ebook where you can learn to trade like myself. It's 300 pages. I literally wrote everything I know in there. So if you want, grab it and take care, guys. Have a wonderful day. Stay safe and goodbye.